President Trump's in the Davos summit at the moment. It's the Global Economic Forum, or the World Economic Forum, where the world's most powerful and wealthy all meet up for a long, extended sort of 3 or 4 days of posturing and, drinking a lot, I imagine, discussing the shape of the world. I would love to be a fly on the wall in that, make no mistake, but unfortunately we cannot. There are snippets here and there that you can get access to. Good afternoon, ladies and gentlemen, and welcome to this afternoon's session. Hope you're all doing well out there at the moment. As we all hold our breaths for the Davos summit to be over and done with. So, there's lots still going on out there in the markets at the moment. The European indices in particular have continued taking a beating into the session today. We are seeing a bit of a correction now, a little bit of a buyback, but we've reached some pretty major points of liquidity, of which we'll dig into in a moment. But yeah, it's still deteriorating. It's deteriorating pretty quickly. We've had a big down day today. At the lows, we were looking at the DAX losing almost 2% of its value, down to the low of 2450. It is, as I mentioned, is contracting now and having a bit of a corrective, but I imagine this will continue. And this is as a direct result of Trump fighting the powers that be that have sent all of the military aid, personnel and ordnance to Greenland. And he's fighting them, and dare I say us, via trade. So he's continuing to pump out more and more tariff threats and having them sanctioned almost immediately. So they will come into effect very quickly. And the problem is with this, of course, is that with the trade deals that were agreed in the end of the trade war that we had last year, we were finally thinking that there may be a little bit of an economic respite, at least here for us in the UK and in many European nations. He's obviously, it's a bit of a case of a puppet master and his puppet, the puppet and the puppet master with Trump and the rest of the administration. But of course, we are now approaching a second wave of economic turmoil that, things are only going to get much worse before they get better. And unfortunately, that's largely to do with the Greenland situation. Now, of course, we have no idea what the retaliatory measures are going to be from the rest of the nations in Europe and the United Kingdom. We don't know, if we're going to see our governments sort of bend over and bow down sort of thing, if you like, as a result of the trade tensions and the trade wars that are continuing. But that's what's on the table. So as far as the markets go, it's a really, really turbulent time out there. A seriously turbulent time. We should expect crashes. If this is to continue, because we're coming ever closer to an escalation. I'm not necessarily saying military escalation. I don't pretend to know anything more than what the news tells me about that kind of stuff. But we're certainly looking at a trade escalation, trade war escalation, and that really kicking off again. Now, if none of you remember, the last trade war and tariff onslaught that we had saw the markets really crash, and they crashed pretty severely. As you can see here in recent history, a lot of the trade war stuff that we had last time throughout the course of 2025 made us range predominantly. But look at the DAX here, which was at the beginning of 2025, the first quarter, when the trade war was really kicking off. The markets really did sink a significant way. And we haven't really recovered. I mean, the DAX in particular has recovered, and obviously the UK FTSE's had a really good start to 2026 so far, right up at the highs here. But make no mistake, this can be wiped out, and it can be wiped out very quickly with everything that's going on around the world. So it's going to be, I mean, it already is, and it's going to continue being an interesting time for our markets and how they will perceive the day-to-day information. Now, of course, I may have mentioned this morning in the Gen Chat that we do not have the president's speech taking place when I thought it was. President Trump's in the Davos summit at the moment. It's the Global Economic Forum, or the World Economic Forum, where the world's most powerful and wealthy all meet up for a long, extended sort of 3 or 4 days of posturing and, drinking a lot, I imagine, discussing the shape of the world. I would love to be a fly on the wall in that, make no mistake, but unfortunately we cannot. There are snippets here and there that you can get access to, but nothing that's of any real worth at the moment. We need to wait for it to finish and then everything to be provided to us via the normal channels. So it finishes on the 23rd, and we should start receiving information up to even as early as a day after. So I think we're on the 20th today, aren't we? So 23rd is going to be Thursday. Friday, sorry, beg your pardon. Friday's the 23rd. So over the course of the weekend, 24th, 25th, Saturday, Sunday, and then into the end of January, we should be looking at some information from that World Economic Forum, and I will relay the data onto you as I receive it. Now, one more thing. It is Penguin Awareness Day today, guys. Okay? Penguin Awareness Day today. So all be aware that there are penguins out there. And watch a video of them, of course. It will cheer you up in these times of severe negativity out there on the media and on the news and everything. Definitely worth a watch. They brighten your day up any chance they get. So, good afternoon to everybody else as well. Good to see you, Nadia. H&C is in the house. We got Jack Buckles. Thank you there for the penguin awareness to you, sir. Good man. We got Cora Tim. Good afternoon to you, buddy. And good evening to you, Matthew. Good to see you, mate. Nice to see everybody out there at the moment in the room. And that's my 2 cents on what's been going on, just to bring you up to speed on what's happening out there at the moment and why we are seeing such a significant decline across our our European indices, which I do expect will continue for a while. So again, I'm not going to tout here. This is bear market. We're in the bear market now. Get ready for the big crash. Not at all. I'm not at all saying that, but we are certainly at a little bit of a tipping point, I should imagine, where we've seen a lot of bullish interest in these stock markets recently. And I believe that's probably about to come to an end. I can't call it a couple of big down days, the tipping point per se, but fundamentally it does seem like we're just about over the edge of the bullish run, and we could start to see some serious bearish activity start bleeding through into our charts. And that's that. Now, in terms of my trading performance for this morning, based on the opportunities that were released, a little bit of a shame. I think I probably got a bit tired of hanging around down here. I had a target profit down here at around 24.55. We came close several times. It just didn't do it. I still held on, and then sent the message out. Obviously, I exited the trade right before sending the message out to you guys saying, that's it, I'm done. By which case, it was only about half an hour later, and the market went down and hit my target profit anyway. So that was a bit annoying. But nevertheless, still came out with a 1 to 2.53, so was very happy with that. And that was my only trade this morning. That was my trade of the day. UK FTSE also absolutely crushed this morning. Really nice run, but we never got a price action pullback. We had this single little bar at about 7:45, and I really would have liked to have seen any kind of price action pullback. Unfortunately, it didn't happen, and we just had a straight shot straight through liquidity, 1 and 2. We've come back up to retest. It looks like it may well want to continue to the downside. And that's where we are at the moment. Now, other news. Natural gas is on a 10.78% day so far. That is big news. What a week so far for this one. Unfortunately, yes, we did take the hit on our long-term short, or I say long-term with a pinch of salt, our semi-long-term short. It's absolutely rocketing up as geopolitical tensions increase, tariff wars, trade wars increase, the potential for military escalation increases, demand vacuums are all over the place. Plus, the US is in a mega freeze. My grandma in New York was hit by a complete and utter whiteout. And the video footage she sent was, honestly, it was incredible. Out of the on her porch, she was yeah, it was absolutely incredible. I mean, I've never seen anything like it in most places. It was a complete and utter storm over there. It was -8, and they had 5 or 6 foot of snow in the space of a night. So yeah, it's pretty bad, pretty bad. I mean, it's exciting obviously if you don't get snow and you're in Old Blighty, where your regular weather sits at around a nice 11 degrees in rain. But over there, they have to deal with this stuff quite often, and yeah, it's looking pretty bad. A lot of things have been damaged, and a lot of infrastructure been taken out by it. And of course, natural gas, the demand vacuum continues. It's fundamentally driven asset, and it's a clear reason for it to be doing what it's doing. It's not really given us any kind of chance. We got a break close and a retest. We had a break of structure at about 6 o'clock this morning, by which I wasn't even at the charts at that point in time. But it's just not stopped. It really has just pushed itself right the way up here. And over the course of the last 24 hours, not even 24 hours, let's say 18 hours, just for a bit of perspective, when we closed on Friday, we opened up here. We're now trading up here at a 26, best part of a 26% gain in natural gas over the course of, let's say, 18 hours active trading time, which is insane. That's an incredible run. Unfortunately, though, as I mentioned, we're not going to be able to get in on this one unless we get some kind of significant contraction, arguably back down to perhaps this level in here. Nice price action pullback, 389 hit, and then we can look to buy back up to around 435 to 440. Fundamentally, everything's going for longs, and it still makes sense. But the market's going to need a price action pullback at some point. So I'm just wondering when that's going to be. When it takes place, we'll try and lock that down. Otherwise, we've got continued growth in precious metals as risk-off theme continues and escalations continue to raise around the world at the moment. We still have the safe haven capital flow from most of the risky assets, as we can see here. It's just a cash transition from risky assets straight into the safe haven commodities. It's not been that dramatic, I would say. It's a relatively strong move, but it's not been too dramatic. I would, however, expect this just to continue, guys. So we're currently at 47.26 in gold, and yeah, the bias is to go continue long. The amazing thing is that we didn't actually trade anywhere up on the market open yesterday. The market opened up, had the big gap, and it literally stayed within the tightest range you could possibly imagine before getting this rally. So it just goes to show where that market sentiment is right now. The market sentiment right now is incredibly high risk. Investor sentiment is just risky. So buy gold, buy silver, platinum as well if you can. I know it's an expensive asset to trade, but that one as well is definitely up there on the need list, I would say. But start with gold and silver and work your way off from there. In terms of CFD opportunities, it's going to be the it's going to be the same old thing. Retest, continuation. Unfortunately, I wasn't even looking for a big retest this week. I was only looking for a tiny move back down into 46.40. We didn't even reach that. So we're going to have to get quite creative, I think, to get some CFD opportunities off on that one. Now, otherwise, assets like the AC and stuff, obviously this is still ongoing. Believe it or not, the market did not take me out for a target profit on this high. I imagine if most of you guys are in it as well, you most likely will still be in this one as well. It's annoying as hell, to be honest. Definitely would have been caught out on the wrong side if it was a stop loss we were talking about here. The spread would have taken us out, but no, it's a target profit. It didn't hit it, and so we're still ongoing. Must have hit by less than a pip to that TP. So yeah, it's just going to be a case of being patient and waiting for the thing to continue. Otherwise, trading assets at the moment, it's a little bit of a complex navigational situation we've got ourselves in here, because we have to think about where money's coming from, where money's going to in the current climate. We've got a lot of moving parts here to consider, a ton that we've spent the majority of the session so far today considering. So something like the USD yen, for example, is very, very high risk. The Euro USD, very high risk. Pound against the dollar, very high risk. I think in times like this, it would be much more prudent to try and focus on exotic instruments. Possibly not just exotic, your uncommon instruments as well. But get away from the majors as much as we possibly can. So I'd be looking at things like maybe... What would I be looking at? What would I be looking at, guys? I mean, pound against the CAD, for example, would certainly be one that I'd consider, except for the fact that it's not doing anything, so I don't really want to consider that one in particular. Pound against the Australian dollar could be another. Yeah, it's not looking great either, is it? It's not looking too fruitful. Pretty solid trading margin between those 2 points. We can't trade it from where it's trading right now, but if it comes back into liquidity at some point, we'll be pretty good to go. That's a nice area down there. So if we get a rejection from the lows, break structure, and then rally back to 240, which would be okay. If we go long first, the breaker structure point for this one should be around there, I would say, as an aggressive option. So I think GA could certainly work. It's just about having your alarm set up and being on top of it, getting organized. Whoops. Where did I have that? That was about there, wasn't it? Yeah. So yeah, something like that, I would say, for the GA. That's a split opportunity, that one. What's the Euro NZD saying at the moment? Euro NZD is not too bad. It's coming up for a really nice retest of this area at the moment. That makes a lot of sense. Could we get trend continuation on this one? Maybe a run back down to the previous lows. I mean, that is one hell of a V reversal, isn't it? We could certainly look at the continuation down from there. Break a structure point for a short following the retest of that level could be at about this area in here, I would say. So we've come up, reject the highs, break of structure, big push back down to the lows. It does have a couple of TRS we need to be aware of. Nothing that could nothing that can significantly get in our way. Actually, well, that being said, recent history does indicate quite a big inflection point, and it sits right in the middle of it. That's quite annoying. It didn't work the first time. It didn't work the second time. So, in an ideal world, it wouldn't work the third time either for us. Just be aware that this level where the red line is, pretty big inflection point. I'll remove the zone, but be aware of what's going on around here. I'm also not willing to take the trade where it is at the moment, so I would need to see the second opportunity. It would need to come up to here again and then reject that level and come back down to the lows. Okay, so the red circle is mandatory. If it comes back down to the lows, then we can talk about going long and buying it back. But it would be nice to trade it. If we go up to the daily time frame here, let's just grab a bit of context quickly. So where the daily time frame is trading at the moment. Oh, wow. Real-time example of why it's so damn important to watch the daily chart, guys. Real-time example. That's a big point of liquidity right there. That's a cash-rich area. What we can see here on the daily time frame is the daily's actually come down here, trapped a few shorts, and then quickly reverted long. Could we be looking at an opportunity on the opposite side of this, you know, coming back up to this level in here? There is an area in there as well, which is probably acting as the daily median, I would say. Let's have a look at those trading margins availability. So we've got the median, we've got this one. The trading margin sits between these 2 points. See, it's knocking the entire trade on its head now. Because frankly, I don't actually see too much opportunity in this margin. There's a lot of itsy bitsy price action going on around here. Doesn't make me feel confident. Doesn't make me feel like this is something I want to be certainly taking a stab at. I tell you what though, the margin above here looks good. Yeah, I don't see anything wrong with that. There's a good break of structure point there as well. So if we just drag our zone through there for entry, pretty aggressive. A lot of miniature inflection points, minor ones. Target profit up at the highs there. Stop loss at the low. It's going to yield a 1 to 3.2. Nice tight spreads on the Euro NZD as well. So I'd certainly be interested in this. Give that one a stab. That's trading with the daily liquidity as well, so it makes a lot more sense. Euro yen. Let's check out that DXY quickly. Yeah, big down day for that one. These two candlesticks have wiped out the last 2 weeks' growth in the dollar index. I'm not entirely surprised. Trade wars now back on the table. It's not just damaging It's not just damaging Europe and the UK. It's certainly self-imploding the US as well, and their current economic situation. The only thing that's going to do is increase inflation. Remember all the moving parts here, team. There's a lot of interconnected areas here that are going to be damaged by what's going on around the Greenland situation, economic as well as everything else. Obviously, we need to try and focus on the economic side of things more than any other. Euro yen could be okay. We've got another point of inflection, which is at that high there. If we drag that through, what kind of margin does that give us? It's good enough for a trade. I mean, if we get a nice aggressive break of structure in there, but this is difficult to navigate. Again, lots and lots of choppy price action in here. I don't want to be clutching. It is the area in which price action's rejected on this level though as well, which is good. That's a good sign for us. Lots of highs, lots of lows in the market, and then finally we get the big drop. On the way up though, well, I suppose we hit liquidity first, didn't we? Yeah. I think that's probably the best of the bad bunch. So what we can do here is plan for a short in the euro yen, looking for a target profit down there, and a stop loss possibly. I don't want to go too tight on this one, so let's call this one a 1 to 2.5. Just give it a little bit of extra room to breathe. And remember that this is going to be mandatory. The red circle. The red circle of doom. No, the red circle of opportunity, this one is, team. Mandatory. Market needs to hit liquidity first before we get the rejection back down. Right, what else? I want one more, ideally. We're already in. Well, yeah, I suppose we're already in the Aussie CAD, sorry, aren't we? I don't want any other yen. I'm taking a risk as it is with the euro yen. So I don't really want to increase that. What about the CAD Swiss? Or maybe the Aussie NZD, actually. Aussie NZD, perfect. Perfect trading instrument for these times. That's a shame. Really nice break, close, retest, continuation. Although that was 12:30 last night, so obviously for us here in the UK, no good. It's just bottomed out recently at the next major point of liquidity down. That would have been such a nice trade. I won't say anything else about it, but it really would have been. Thinking about steps ahead, we've got a relatively established trading margin in here. Good success rate. Could we be looking at trend continuation down? Maybe a trading opportunity in between these two areas. This would not be a quickly completed position, I don't think. It's been a couple of times where it's not taken too long, but there's been other times where it's taken a great deal of time. Thursday the 18th, right the way through Friday the 26th, which is when it hit TP. That was a long one. I would like to think that we probably get some pretty good moves and down to 114.50 by end of week. But you can never know for sure. A buyback opportunity as well is possibly on the cards, but the margins are a little bit tighter. So the breaker structure, wow, actually, yeah, I mean, we could look at that actually, which would change the narrative a little bit. Although the market's already broken up above there, so let's just make sure that. Yeah, I'm gonna get. No, I am gonna go for that one. Yeah, so what we're going to do here is look at a bit of a better, more robust no man's land. This protects us from the potential of any wick throughs or any random volatility strikes that the market's probably going to be quite prevalent with at the moment. And we're still looking at a yield of around a 1 to 2.6 on that one. So that's not bad. That's not bad going at all. I want a 2.6 on the long. I want a 2.7 on the short. Okay. Great stuff. That's the Forex market covered. Now, we already know where we're at with the precious metals. Ultimately, we just have to be very prudent looking for break, close, retest, continuation opportunities. I mean, I should imagine I'm thinking very similar to the majority of you guys out there at the moment as well, thinking that we don't really want to be taking longs up at these highs and buying in up here when the market's had no pullback. I mean, I would not consider this to be any kind of pullback. So the market hasn't pulled back so far this week. We've had these little minor, retests of tiny little liquidity points here. But when we go up and we consolidate that information, the market's just running in one direction. It really is right now. I need to see more than that. I need to see more commitment to profit taking from commercial institutions before I can get that excitement about starting to get the bid. I don't care about this anymore. It's obsolete. This one, however, it was the beginning of a big price action pullback. In the grand scheme of things, it's absolutely tiny, but it's the biggest one that we've got to work with right now. So price action pullback down to this area, and then we start to look at the buying in process. I can map that out and send it to you, but honestly, guys, it'll be a while. We may even have to wait until next week, to be honest, to see a return on this one. In terms of silver, very much the same thing. We haven't had that kind of growth in silver that we have in gold over the course of this trading week. To be honest with you, it's looking a little bit more scrappy, this one. So I'll probably stick with gold for the time being. Commodities, we already kind of know where we are with this. Oil's not doing anything at the moment, and rightly so. There's too much uncertainty surrounding it, so there's not going to be a real influx of demand or supply situation going on with that one. Natural gas is absolutely firing on all cylinders at the moment, but we need to see the continuation lower, retest that point of inflection, and then we can get excited about the potential for a buy-in. I can send that one as well, but obviously, again, this is not a confirmed trade idea. We need parts of the process to play out before we get in that. And then we've got the US indices for this afternoon. Now, US indices, we didn't actually discuss this earlier on, but the US indices are certainly being dragged down. Excuse me. Sorry, guys. 2 secs. Excuse me. So, yeah, we're still seeing that kind of drag down cycle in the US indices. It's going to be down to a few factors. Number one, the fact that the tariffs Trump is slapping on everyone over the Greenland situation is having a detrimental effect on the US economy, will increase inflation over time, make the Fed's role a lot harder. You've also got the fact that the potential for US government interference, US presidency interference into the US government via the Fed is actually a very, very complex and dangerous narrative that is starting to form over in the US at the moment, which is going to have, if that becomes a thing, it will detrimentally affect all US trading assets, because then we're looking at the entire economic policy being shaped by business agenda. You take a minute to think about that statement, because at the end of the day, when someone has a personal stake in something, they're always going to drive policy to meet their needs. This is what we've seen with Trump the whole time so far, and this is probably what this is a potential of a situation that's starting to form. And then we've also got the third and the weakest narrative across the board, which is the US indices are very much tied to the European indices. And if we have major European sell-offs taking place as a result of everything that's going on, the US indices via the exchange traded funds, where they're all grouped together and sold out as a collective trading instrument, are deteriorating. They are going to drop down. The European indices are getting beaten. The US indices are going to take a bit of a hit on that as a result. So there's multiple avenues or angles that you can consider when thinking about where the narrative is with the US stocks at the moment. We could certainly look at the potential for buybacks. I mean, this is an opportunity here for the NAS 100, for example, that I sent out yesterday. It's a pretty nice point of liquidity for sure, but the fundamentals are what are driving price action. So as much as the technicals look good, we do need things to align, and right now they do not align for longs. Now, looking at the daily percent change so far across all three of these assets, we've got minus 0.65 and minus 0.57, and the S&P respectively has a minus 0.61. So it's pretty significant down days already, and we haven't even reached the US market open. Looking ahead, US 30 Dow Jones today has some absolutely insane margin right the way back down to 47.80. This is as per this week's market analysis report. So that's not looking too bad. Obviously, we're not looking to take the entirety of this margin on a single US Open, but if we go back in time on the 15-minute time frame, we will certainly be able to find some pretty decent pockets of liquidity to be able to use as target profit areas. For example, this area in here is the median of that margin, and if we scroll ahead, would make for a really decent little short back down into that area there. We are currently at 2 minutes past 2, so we don't have long at all to wait before the market open takes place. We could be looking at a breaker structure point below there for a potential short down to the lows. So entry, target, and stop loss at about there for a 1 to, well, that's insane actually. So maybe increase the stop on that one to a 1 to 3.5. Make it a little bit more forgiving. The second opportunity, if the market breaks through this area, is a breaker structure below that low, which again is going to yield a very nice trading opportunity for around the same. Target profit, entry, maybe a little bit lower, a little bit of a better margin below that low, and then your stop loss for around a 1 to 3. Okay, so trading opportunity number 1, if the market stays above this point until the market opens. Opportunity number 2, should the market break this low before the market opens. In terms of longs, you're out of luck. The US 30 Dow Jones has no plausible long availability today, so it's a short only market. NAS 100, very different kettle of fish. We are right amongst big liquidity at the moment. That's on the 4 and the daily time frame, so it is a big point, which means we do have opportunity to trade in the grey. It's not something I would historically really like doing, but it is possible. We have the potential for a target profit, which is situated at about there. We have the potential for a breaker structure point in the market, which is situated around here. Make no mistake, we have come up to this level once before. It has broken structure and it has failed, but this is at 1:45 on a Tuesday afternoon European hours. So unimportant, relatively speaking. I would like to think that if the market was going to come up here past 2:30, we were just going to get a straight shot right up to the highs there. This is a pretty tight trading margin. So if you look at this and review it on a 1 minute time frame, you can see that actually this will probably be achieved in the space of a couple of minutes, a couple of big 1 minute candlesticks. It could be done and dusted. You may want to wait for the market to actually break through the structural point up here, which we can tighten up a little bit here, bring that to around there, and then you can look at trading up to the high at 25.31. Personally, I do not condones the wrong word. I am not a fan of that. I don't know. I can't think of the word that I'm using, the term I need. I'm just not a fan of it. So I won't be proposing this as a trading opportunity that the fund personally will be taking this afternoon, i.e. myself. I won't put my money on the long up there. My money will be happy trading to this level in here if I can pull it off. If the market breaks up here and the spread's too wide or whatever, which is a very high probability, I won't be trading the NAS 100 at all. I'm not interested in the short because the US 30 Dow Jones has much nicer availability with a much better looking chart at the moment to trade, which then leaves the S&P 500. Now, let's go up to our anchor chart here, the 15-minute time frame. We instantly can see a nice area of liquidity, which is in there. Works really well. We also have a really nice point of inflection, which sits in there, which is the beginning of a major turning point in the market in the 15-minute time frame. Also allows us to have a good view of the available margin for longs, which is between A and B, which has been utilized quite a few times, I would say. This is all looking really nice in the S&P 500. Very much different chart than the NAS 100. Still has a 48% exposure to US tech, which is quite volatile, moves nicely. And then you've got all of the backbone institutions as well. You've got some financial institutions, a lot of them, some motor trade, and you've got a good basket here, all of which are doing quite well in, I would say, relatively resilient in terms of trade. Some of which is not, but a lot of which is, especially technology stocks. They are very resilient with trade. So I would say if you are looking long the market today, S&P 500 is certainly going to be your front runner. You should be looking for opportunities via breaker structure points at around 68.62, targeting the highs, stop loss down there at the lows, nice little margin below the point there, looking for around a 1 to 2.5 on the long. The short, again, I would revert to the US 30 Dow. There's just no point considering shorts in anything else. So long the market today is going to be the S&P 500. Shorting the market today is going to consist of the US 30 Dow Jones. Have the two charts side by side. You are only short one, you are only short the other, and you can't go wrong. If the market absolutely spikes upon the open in the S&P and you miss your opportunity, then it's tough cookies, to be honest, guys. There's nothing you're going to be able to do about it. But what I would like to think is the fact that the S&P 500 is trading down at 68.40 at the moment. There is a relatively decent margin between where it's trading at the moment and where your proposed entry is. So it does allow the markets to have that spike before the potential of your entry is up and coming, so that you can prepare and get ready to take that trade. Okay. And yeah, I think that's about it. So please, question time. Everybody okay and feeling good about this afternoon? Relatively clear on the mission, the task at hand? Are there any other questions? Any other potential complexities that you would like assistance with at this time? Thank you, Cora Tim. I'm glad you are all clear, sir. Hey there, Nadia. Yeah, all fine. Excellent. Glad to hear it. All good, Matthew. Good stuff, buddy. I'm glad to hear it. I know a couple of you other guys are at work at the moment. H&C, excellent. Well, listen, I will upload all of the trade alerts to the UTC Fund Alerts channel. Those will be ready for you to review in a moment. So don't worry about waiting too long for those. We are currently at 2:10. You've got 20 minutes to go for the US Open. And we've got obviously a few other trading assets that we need to incorporate into our preparation this afternoon as well. So I will leave you there, wishing you all a fantastic day today. Look forward to catching up this afternoon to see how it all went, and we'll take it from there. So take care, team. Have a good one, and I'll see you then. Thanks a lot. Bye-bye.